Hello, and a very warm welcome to a new episode of the Eurafrican-Alliance podcast. My name is Lauretta Ojupu. I am the Vice Chairman of the Eurafrican-Alliance, a non-profit based in Germany, and we are dedicated to strengthening cooperation between Europe and Africa. I'm happy to be your host today and grateful to have you joining us. Our episode today is titled North Meets South, Co-creating digital solutions for economic inclusion. We'll be exploring how digital innovation is reshaping business, society, and global partnership between Europe and Africa. In July 2025, the United Nations Conference on Trade and Development, UNCTAD, convened a major digital economy program milestone event in Lagos, underscoring Africa's growing centrality in the global digital conversation. And the numbers back it up. Nigeria's ICT, information, communication, and technology sector now contributes over 11% of the country's GDP, with the government targeting 21% by 2030. In Q3, for example, alone, electronic payment transactions in Nigeria hit a staggering 384 trillion naira. And in the global ranking released this month, Nigeria has been ranked first in Africa and 38th globally in the Responsible AI ranking, climbing an impressive 42 places higher in just 1 year. At the same time, the National Digital Economy and E-Governance Bill 2026 is on the desk of President Tinubu, ready for signature, a landmark and framework that is set to define the rules of digital road for Africa's largest economy. And the EU Global Gateway has committed 45 million to support Nigeria's digital transformation, signaling that Europe is taking this shift seriously. So these trends represent real decisions that European and German companies need to understand and act on strategically. To help us make sense of this rapidly evolving landscape, I am joined today by Professor Dr. Philipp von Carlowitz from ESB Business School. Professor von Carlowitz heads the think tank Doing Business in Africa and has intensively studied digital technologies, innovative business models, and African entrepreneurship. His research is supported by numerous interviews with experts from both multinational and local companies. Welcome to the podcast, Professor Carlowitz.
Thank you very much, Lauretta. Thanks for having me.
All right, let's dive in with the big picture. So digital technologies are frequently highlighted as a silver bullet for Africa's economic development. However, we have infrastructure and digital access across the continent which remain highly uneven. From a corporate perspective, this creates significant hurdles for both local startups and entering multinationalities. This brings me to our first question. How can digital technologies, especially under conditions of unequal digital access, serve both German multinational companies and African local enterprises in addressing these operational and infrastructure bottlenecks? Where do we see successful examples of this dual approach working?
Thank you very much for that very relevant question. First of all, of course, the digital infrastructure is a prerequisite for any digital business model or digital tool to help you with operational issues. Secondly, the activities of international companies and also larger local companies tend to be focused more on the urban areas where we actually don't have such big gaps in most countries. Okay, so I think actually the preconditions are more or less there. If you want to sort of support digitally rural agriculture or agribusiness, then what you mentioned becomes a big issue. Otherwise, especially in the B2B business, it's more on the more urban sides where we don't see those problems. And by the way, in many countries, the interconnectivity is better than in European countries. Okay, so I think we also need to say the speed in some areas and countries is actually faster than in Europe. Coming to your actual question, so how does that help or support, and what does it mean for first multinational companies or foreign companies coming into it? Well, we always hear so much about the obstacles of doing business in Africa, the problems at customs, the corruption, the bad roads, the lack of electricity, lack of access, especially when it comes to last mile distribution, reaching the end customer. And I think here on many accounts, always country by country, industry by industry. Okay, I'm generalizing here a bit, but I think digital technologies can play a huge role because logistical costs are very high when it comes to transporting to Africa, which is not just the transport cost, but very much also with regard to customs clearance. Now, many African governments and customs agencies have started to digitalize the customs clearance process. It's not 100% working yet, so you still carry paper, etc., with you. But where it works, it actually facilitates and speeds up the import process and also the export process. Yeah, so it's not just about products coming in, but also about products coming out. Yeah, so it's faster and it's cheaper, and if it uses blockchain, also one field of where corruption typically moves in, sort of you're missing documents, etc., is gone. Yeah, so even on that account, it can actually be a game changer. This is sort of still in the making. Yeah, and there are also some pressures which are not so keen on the system working very well, but I think it'll come, and it's not coming in 10, 15, 20 years. It's coming in the next couple of years, depending on the country. Another logistical issue is national transports. Yeah, delivering from Mombasa to Nairobi. Yeah, here transportation costs are usually very high because you go from the harbor to Nairobi full, but then coming back half empty. So basically, you need to charge both ways to one customer. Now, here we see a lot of digital platforms that offer shared logistic capacities. Yeah, so if you're a truck owner, you can say, okay, I still have 3 cubic meter empty space. And then people can say, okay, great, I have a pallet of pineapples or what have you. And then you can sort of book that space. Yeah, this makes logistics more efficient, also on an environmental level, because empty truck is just polluting and not productive. Yeah, but also from a cost perspective, because now customers pay less because truck owners or logistical companies need to charge less because in both cases it's full and they get paid. Yeah, so it's a win-win situation. And that solves quite a significant part of the high logistical cost, regardless of what the infrastructure situation is. I mean, a bad road is a bad road. You can't change that. Then when it comes to last mile distribution, so the distribution from your warehouse to the end customer, I mean, here probably everybody knows the famous zip line, yeah, where you have drone transport. Okay, Zipline in Rwanda use their service mainly for blood transportation, but it's also using that nowadays in the United States for Walmart, a home delivery. So we can use it for many other things, but the blood, or besides the blood issue. Yeah, so this is actually helping to reach rural households, which are otherwise pretty unreachable. Okay, so here there's a lot going on, and Zipline is just the most prominent example. If we look at sales, one big issue that large companies very often have is that the products are expensive, and sometimes the funds are not available for the expensive products, even if they are better and you want them, but you don't have the $1 million which you need. Yeah, or you don't have the $1 million in US dollar if there's foreign exchange restrictions. So here, new technologies can help you to run systems like pay-per-use, installment payments, also on a smaller scale. There's a company called Coppergas. They use a smart meter, so you get a gas access, and you can put in, I don't know, 1,000 naira, and then once you've used it up, the valve shuts down, and then with mobile money or however you do it, you can pay again, and then it opens up automatically. Okay, so using smart contracts reduces a lot of human interaction when it comes to opening, closing the valves. Then we have the whole huge and fast-growing e-commerce landscape across Africa, and this is not just Amazon; it's very much also local platforms, and even a topic like human resources. We're currently working on the use of digital technologies in the talent acquisition. So you can use AI to scan and screen application CVs and letters. All of this is beginning to come, and some providers are already offering that. So just some examples, and I don't want to go on for 40 minutes on that question, but it's already there. Of course, it can be improved, but it is changing, and local companies can use it, international companies can use it, and need to integrate it into their business approach.
Yes, thank you so much. And that context is really fascinating, especially because African markets are famous for leapfrogging old technologies straight to mobile and decentralized digital platforms. Nigeria is a great example. While Europe built, decades of branch-heavy banking infrastructure, Nigeria just bypassed that stage entirely. And today, mobile-first and fintech platforms kind of dominate, with Nigeria's digital transactions just surging by 79% in 2024. And it's not just banking, even Nigeria's mobile industry is equally telling, with mobile connectivity becoming the primary gateway for commerce. You talked about, I believe, Bitcoin and all that kind of payment method. So communication and financial access is being made to millions. Your research often highlights how local businesses adapt to these realities in incredible, agile ways. You've also mentioned some examples here already. So from a strategic perspective, how can African-driven digital ecosystem innovations and platform models compare to traditional Western approaches? And what best practices in local market adaptation could German firms learn from local African companies and vice versa?
Yeah, thanks for the question. I mean, there are some digital hubs, also very much driven by innovation hubs, where if you look at who the startups are, very often it's app developer for different uses. So we see in Nigeria, in Ghana, in Kenya, also Uganda, Namibia, we see these hubs springing up, and not just providing digital companies, but also other companies, but very much on the digital side. So we have this ecosystem. We have a full abundance of digital solutions for many different projects, be it, for instance, getting an identity. Yeah, there a couple of years ago, that I read about a startup that was collecting information from all different digital sources to create an identity so that people can apply for an ID card, which is big, because then all of a sudden you can get a bank account, etc., and you exist for government. Or also getting a loan. I mean, here you can use some fintechs use social media input to screen the information and then build a sort of a profile of you, whether you're creditworthy or not. So that goes way beyond what traditional banks are doing. I mean, it might not be $1 million, but it could be $10,000, which helps you to start a new business. So there are a lot of solutions which are geared towards the African markets, but it's not just the African markets. It's also it would also work in Bangladesh, because they have similar problems with identity, etc., or with some South American countries. So I think a lot of the so-called African solutions are actually not geographic solutions. They are solutions for certain situations which we find elsewhere in the world. I mean, I mentioned Zipline before. It started in Rwanda, and now it's used for Walmart in the US. So it can go both ways. And Africa has the big opportunity of being sort of like a testing ground. Sounds a bit like exploitation, but being the testing ground, you can actually determine how the technology then works. And it can become kind of a export concept, business concept that is being developed in the African countries and regions. So I think there's a lot of great solutions that might be Africa/emerging market specific, but also some solutions that could be also retransferred to Europe or the United States. I mentioned the logistical platform. I mean, we have rural areas in Germany as well. So there they have the same problem, going full one direction, coming back empty. So things like this could also come back to us, but they were developed to solve an African problem. But it's actually not an African problem. It's a global problem, but only one starts thinking about it in the African context. So I think, it's, and very often, because you asked what can be transferred from the Western side, I think the backbone of digital solutions can be supplied. The application is then too context specific. So I think, a lot of the, if you talk about Industry 4.0, digitalizing the whole production, this is at the moment, there is no business case also for most African companies, because first of all, labor is much cheaper. Technology is very expensive and the machines are very expensive. You need certain factors that need to be reliable. If it's a big investment, you need political stability, social stability, plus you need a guaranteed cheap power source, which a lot of African countries are still struggling. And shifting to a generator sometimes is not a solution, because your production will stop for a couple of minutes, and then by the time it starts again, you lose 10 minutes, and also the scale is too big. I mean, this is, so if you would think of Industry 4.0, I mean, this sort of like going to the higher end. This makes sense if you need to produce and supply large markets. But if you take individual African markets, and I know that's very unpopular to say, but by international standards, they are fairly small. So having a highly productive global production site using the newest technology is not the answer for the situation in African countries. But taking something from these ideas and scaling it to the needs of African markets, there is definitely something, and a lot of like Microsoft and Amazon, they have apps, software developers all over the continent. So these big tech companies see the potential, the human potential in that industry, but also the potential of applications.
Yes, thank you so much for that very wide answer to that question. Yes, I do believe that, as you mentioned about testing in Africa, just the amount of people living in Africa is a big potential or potential for big companies such as Microsoft and Google, as you mentioned. Let's shift our focus slightly towards concrete operations. In many African markets, companies face major operational pain points. We already talked a little bit about supply. So like fragmented supply chains, complex logistics, and difficult markets access. Professor von Carlowitz, how are digital technologies being used as a practical tool to bridge these gaps and drive business efficiency? And on the flip side, we've talked about some companies that are helping. Are there practical limits when the underlying physical infrastructure is simply not there?
Yeah, thanks for that question. Let me start with the limitations. What we mentioned earlier, I mean, if there's no digital infrastructure, there is no digital solution. So the rural areas are still lagging behind, meaning that a lot of business models that might work in urban digitalized areas might need a different solution in urban areas, which is just a matter of time as the infrastructure is expanded. And then on the other side, coming to the operational side, I mean, we already touched on some of the supply chain issues I already mentioned, or you mentioned the fintechs, which are now more open to find ways of identifying credit worthiness. So that's a big change. Also, smaller sums coming from fintechs as a credit really allows for more entrepreneurship, because it's not a lack of ideas that keeps African entrepreneurship home. Or holds them back. It's a lack of funding. And I mean, even if you go back to Kiko Dangote. As far as I know, he started with $1,500, which he got from his uncle, brother, so from the family. And then he started trading wheat or milli or what it was, so I mean, even he had the problem. He was lucky to have a family that could provide him with a bit of money. Yeah, but some others don't have that. So the fintech is really promoting business activities on many accounts, and I think the banks need to watch out not to lose out on their business. I mean, if you always focus on big business, you miss the majority. In German we say small stuff also makes a big heap. So it's not the big rock, but it's a lot of small stones also make a big heap, and this is what we see nowadays happening across the continent. And also, I mean, on the operational side, basically there is no limit. One aspect is also helping people to save money, on a small scale. Yeah, because very often, if you think of informal craftspeople, yeah, they sell a chair, they make some extra money, but where do they put it? They put it into their socks, or they bury it in their hut. Yeah, so because they don't even have a bank account. Yeah, so now I think even M-Pesa is offering that you can save on M-Pesa. Some of the financial startups, they offer small payments. Large companies sometimes actually offer digital saving platforms for a certain product. Yeah, so it's a smart contract. Yeah, so the craftsman saves, and once there's enough money, automatically the person will get the tool delivered. Yeah, so this is a win-win situation. Yeah, I mean, there are always issues with stuff like that, but in principle, it's a good idea where digital technology really opens up new horizons and also includes. It's a very inclusive, has a high inclusive potential to get people out of the informal sector into the more formal sector. Yeah, which has a lot of development economic implications as well. Yeah, so I really do see helping digital technology helping companies is actually also helping the country in many ways, because products get cheaper, there's more access, government will probably get more tax income, and then hoping that they use it wisely for the people. Yeah, so it's not just just for the business, it's for everyone, only via the businesses.
Yes, and thank you so much for that. And you're right, especially when we look at access to credit for entrepreneurs, not only making the access easier as how to get to it, but also we have very high interest rates, which is also detrimental to a young startup or a young entrepreneur who isn't as lucky as Dangote to have family members giving them money. So your research strongly emphasizes that successful digital business models in Africa require contextualized approaches. The barriers are real, from regulatory gaps to weak digital ecosystems. Yet African digital startups and service multinational corporations are emerging as a highly resilient new category globally. At the same time, initiatives like Germany's digital transformation with Africa reflect a growing European commitment to this space. So, looking at the commercial reality, what makes a digital business model truly scalable in Africa? One that works for both resource constrained local companies and well funded German enterprises.
Yeah, very interesting question. To the first part, one thing that has been happening more and more is that companies are thinking of business process outsourcing, the BPO, so that you do accounting in Africa, which of course is only possible because of the digital infrastructure. This is a topic that has been emerging more and more, has a lot of related issues, education, legal requirements, etc. But this is definitely in light of a lack of skilled workers in Europe, in most European countries, due to demographics. Yeah, one is trying to look for solutions. And what really changed in the last 10 years is before one looked for solutions, but Africa didn't exist. And nowadays, you actually also look at Africa if that can provide a solution. It doesn't have to be Africa, but at least it's on the world map. And this I find as a very hopeful message. In terms of scalability, well, digital technologies on many accounts, especially on the platform logic, allows for scalability. Here I see a different issue. I think the whole issue of scalability in general is limited, especially for local companies, due to the fairly small national markets. Yeah, because I mean, if you look at GDP, then you divide it by 400 industries. Yeah, so some markets are 5-10 million euros big, and then 20 companies need to share that. Yeah, so I made the numbers up, but I mean, this is sort of like the size we're looking at. So if you want to scale, you need to have a regional logic. And I know a lot of African companies are actually internationalizing, mainly to the neighboring countries. We're also working on some research there. And if you have a digital platform, this needs to work also in the neighboring countries. And here we're coming back to the digital issues, because for that, data needs to flow across borders. And I just recently learned, I'm not a very good tech guy. I know how to turn on the computer, end of story. But what I learned is you need to have certain data format standards. The example used was the date. In Germany, we say day, month, year. In the British and American system is month, day, year. So if these two match, the system will not understand it's a date. Yeah. So if you want to scale a digital model through a platform logic, this data transmission needs to be working. Yeah, which it does, as I understand, across some countries, but that's a prerequisite. And then all of a sudden, the platform model is very easy to scale. Yeah, because you can use the same platform all over the region, and then all of a sudden the markets are so big that African companies can actually grow significantly. I mean, we see a lot of fast-growing African local companies, but coming from a very low base. I mean, how many companies outside of certain industries do you know that have 100 million turnover? There are not that many, and this is because national markets are too small, and to scale into the region is difficult for a lot of reasons. But on the digital side, this standardization and opening up, which is one of the AFCFTA plans, is critical. And then it becomes very efficient, and it can also facilitate intra-regional trade and make it easy for local companies to grow big time, because then it's not the Nigerian market, but it's ECOWAS.
Yes,
Yeah.
yes. You're right. We see that there's really little or no trade between the different African countries. Although even trading with Ghana, trading with Benin Republic, which is just beside Nigeria, it's difficult because of the non-standardized solution that you mentioned. So this conversation becomes even more critical when we look at the shifting geopolitical dynamics. You talked about Africa now being more relevant in the economy. Your recent research on China's Belt and Road Initiative in Africa is also very timely. China's trade with Africa continues to grow dynamically, and Xi Jinping has pledged $51 billion in loans and investment over 3 years. Amidst this, African nations are actively seeking to rebalance their ties towards debt sustainability, local value addition, and industrialization. So as Germany and Europe seek greater engagement, how should German companies position themselves? Should they compete directly with Chinese business models, collaborate, or pursue fundamentally different approaches? And what role do digital technologies play in creating genuine value for African partners rather than an extractive model?
Yeah, thanks. Yeah, China and Africa is like an evergreen questions. But perhaps just to put it into context, I mean, the 51 billion you mentioned was at the last Forum on China-African Cooperation meeting. Yeah, so that was the first time in 3 meetings, I think, where the sums actually increased again. We also looked at the credit lines, how much credit is actually flowing. One always has to be careful with the numbers because they are all very political, yeah, but those are the best numbers one has, and it has actually been shrinking. Yeah, so the sums, I mean, they're investing 3 billion, but not 10 billion anymore. Yeah, that's the actual on the ground. So that's one thing. So there has been like a resurgence now in the last FOCAC meeting that apparently they want to pledge and invest more. The second part is that it's not just China, it's a lot of different countries. Japan is very strong. United States is very strong in Africa. France has a very strong network of chambers across the African continent. It's UAE, the Arab countries in general, that have kind of found their love for Africa. Yeah, so we're not just talking. Turkey is very strong on the construction side. Lebanon, yeah. So it's not just China. It would be too simple, yeah, from a European perspective or a German perspective to say it's only China. Then, in terms of what China is investing in, I don't have the exact breakdown in my head, but it's more focused on the energy side at the moment. Yeah, so they are not going broadly into everything. Yeah, so it's strategically what is relevant, facilitating their trade flows and whatever other interest they pursue. Then also when you talk about China, China is not China, because if you look at the state-owned enterprises, they don't need to make a profit. Yeah, so competing against state-owned enterprises is impossible. Yeah, because they will always win because they can go down to zero price. Yeah, and sometimes they do come close to zero prices. Yeah, so you cannot compete on price with them. But if you look at the private Chinese companies who have to make a profit, the business situation is a completely different one. They are typically more price competitive, but we're not talking 300%, we're talking 30%. Yeah, which is a different story because then you can argue with quality, with service, etc. 300%, I mean, it's if I give you a Ferrari for free, why would you buy a Porsche for 100,000? Yeah, so there is obviously the only way is that European governments say, okay, we're also giving away certain things. Yeah, so I think one needs to understand this to then see what German or European companies can do. I think whenever it's a government tender, it's an issue because government tenders tend to be all about price. Yeah? So if it's all about price, the Chinese will basically always win. There's no way European companies with their cost structure can compete. As soon as, and that is increasingly happening because African governments realize what good is it to have a road that is only lasting 1 year in my industrial area and then it's broken again, that an element of quality comes in. And I always tell the German private sector, you should lobby for standards, certificates, quality to be key in also government tenders. Yeah? Understanding also that then it becomes more costly. But in German, we also have a saying that cheap can be very expensive. Yeah, because if you have to do 2 times cheap, it's more expensive than doing it 1 time expensive. And once the quality is there, or you have a pre-qualification phase in the tenders, yeah, then all of a sudden there are not that many Chinese left, and if they can deliver the same quality as German companies, but that comes at a similar price. Yeah, so it really limits the extent of the market you can address, especially in the infrastructure business. On the other side, you can also participate in Chinese projects as a European company when it comes to special machinery, special material. Yeah, so there are certain ways on how you can compete there. How digitalization comes into that, well, it's basically just increasing efficiency, cutting costs, making you more cost efficient and therefore more price competitiveness. Because also normal digital business models the Chinese can also do. So I don't really see a direct link here. But perhaps if one would dive into digital offering by German and Chinese companies, there might be something, but frankly, I would have to make things up here.
Okay, thank you. Thank you so much, especially what you said about quality. I think it's also relevant to educate Africa on the international standards, such as ISO. I'm not sure how much aware they are of the ISO standards, and to compare companies based on those standards. We are now coming towards the end of our time, and given that companies ranging from Fortune 500 firms to agile local startups are navigating this complex landscape simultaneously, companies are looking for a clear strategic framework. To give our listeners a clear takeaway, what 2 or 3 concrete recommendations would you give to German companies just expanding to Africa using digital technologies as a solution?
I knew the hardest question comes at the end. It's very hard to sum it up because it's always, of course, a case by case. But I think a general recommendation would be, don't stick too much to your existing business model, which works in Germany and Europe, but be flexible. Look at the circumstances and the customer needs on site. What are the restrictions your customers have? Because very often, if you don't get paid, it's not that they don't want to get paid, but they don't have a credit to pay you, so they have to wait to be paid themselves because it comes out of the cash flow. Yeah, so be observant, be flexible, and then be willing to adapt your business model. And you will not be adapting it just for Uganda. You will be adapting it to all emerging markets, because there will be very many similarities across the, as one calls it, the southern hemisphere. Yeah, so it's not just for one country. Yeah, and I think it's critical to be willing and be courageous to open up to new structures in your business approach. And when you do this, you need to definitely think about how you can use existing digital technologies, but also screen what is on the market. Yeah, because the market solutions might not be scalable enough for a global company's thinking, but they can actually solve the problem on the ground. And the nice thing about, if we're thinking about apps, it's not so costly than building a warehouse. Yeah, so you can even find a local solution for fairly little money, which helps you to grow there. And based on this, you can develop your own structure, your own platform, your own concept and system. So go to Africa with an open heart and open mind, and see what you find and make it work.
Thank you so much, Professor von Carlowitz, for sharing these valuable insights and for giving us such a clear, grounded perspective on how digital technology and innovative business models are shaping economic solutions in Africa. It has been a pleasure having you with us today.
Thank you very much.
Listeners, thank you. And to our listeners, thank you for tuning in. You can find more information about Professor von Carlowitz's work and the think tank doing business in Africa at the ESB Business School in Reutlingen. And for those who want to dive deeper, this is just the beginning. Join us at our upcoming live webinar, where our experts will be available to expand on these topics and take your questions directly. All details and registration information are in the video description. Thank you once more, Professor.
Thank you.
Until next time, everyone, goodbye. We look forward to welcoming you back on the Eurafrican-Alliance podcast. Bye, everyone.